Good morning, everyone. Darius Dale here to present our macro minute for Tuesday, November 9th, 2021, starting with markets. We got stocks mixed this morning, commodities mixed, crypto up, dollar down, global bond yields down. Big movers today, you got nat gas minus 1.5%, Bitcoin up 2% to a new all-time high. You got the 2-year, 10-year, and 30-year Treasury yields down 3 basis points today on the news that Brainard is in the running for the Fed chair. You got Randy Quarles step down with his year. He announced his year in resignation yesterday to Biden. I think that probably means Biden is leaning towards Brainard, and the people who support Powell's renomination are probably taking ahead for the exit. You got Clarita out in a few months as well. They're talking about maybe a package deal if Biden reappoints Jay Powell, and then having a little bit more diversity in and around the top of the Fed. So we'll see on that. On the economic front, more mixed data with respect to the global auto inventory crisis. You got Mexican vehicle production accelerating to down 26% year over year in October. Brazilian vehicle production decelerating to down 25% year over in October. We also received marginally confirming evidence of our post-Delta bounce thesis for the global economy. Get Australian business confidence ticked up in October. France business confidence ticked up in October. Japan's economy watchers survey expectations index ticked up in October. And you also had the Germany and the Eurozone zoo expectations indices tick up in respect in November. And so that's, continue to confirm a view that we've had really since August. Mixed NFIB print this morning. On the increasing side, you got higher prices, price plans, compensation plans, CapEx and CapEx plans. So not terrible. Declining yet, a little bit tick down in the headline. Employment, fewer no qualified job applicants and job openings hard to fill, as well as inventory accumulation. So you heard it here first, folks. I said we're going to be moving past peak supply chain disruptions, and you're now starting to see a little bit some of that in the data. Expect more of that as we roll forward over the next few months. Looking at our global macro risk matrix, overbought, nothing, oversold, 10-year boon yield, 10-year gilt yield, 10-year Swissy, 10-year JGB, 10-year Treasury, and 30-year Treasury. Similar setup as yesterday. We talked about this. Maybe the global bond market is looking, taking it to the chart here. Global bond market is maybe presaging another breakdown to bearish VAMS. We're not necessarily making that call here, but we certainly believe that this thing will be bearish VAMS, in T-3 months. So just get ready for that. And if it's starting already, it's starting already. And that obviously has perpetuated a little bit more breadth with respect to the equity market in terms of reactivating some of the more digital economy exposures. Looking at today's risk reward setup, you got 2.7% downside versus 0.3% upside. Bloomberg dollar index. Oh, that was the S&P, sorry. Bloomberg dollar index minus 40 basis points of downside versus 130 basis points of upside. And then 10-year Treasury yield, obviously it's oversold with a bunch of upside. But again, we're not going to get that upside. So don't even worry about it. Darius Dale here presenting our macro minute for Tuesday, November 9th, 2021, I think. Cheers.